Tarun Kataria, he joins us live. Tarun, good to have you back. Thank you for
Good
joining us. Interim budget, already history.
As it should be. I think it was, interim budget is a creation of the media, right? There's not much that he can do. It's a political budget. It was sort of a way for PC to sort of tell all of us what he's done over the period of time. What was actually intriguing to me was a lot of time was spent on talking about how agri had grown. Agri is a function of good monsoon. So actually, in terms of what he's done on the manufacturing side, on industry, I think it was.
Yeah. So for agri, just look up, don't look here and there. But the intention is important. The intention is that look, I know the problems and I'm out there to fix the problem. The fact that he's managed to fix the fiscal problem, the CAD is under control. Market should acknowledge that. Market should reward that.
Yeah, but I think if you look at how CAD or the fisc were fixed, it's gold, right, which is a temporary measure, which once those measures dissipate, I think the clamor for safe haven assets starts again. So that you'll find that starts to blow out again. The fisc is about actually curtailing spending this year. So it's not about structurally reducing government spending. It was sort of passing through to next year and sort of make it somebody else's problem. So in a sense, it wasn't really real, and the market needs to see stuff that's real and it's not transitionary. And I think that's the bit that's missing.
But I think he also spoke a lot about how, the export momentum is likely to pick up going forward, and, accounting for the export numbers as well, the CAD was compressed this time around. But how sustainable is that?
Well, it could be sustainable. Remember, that's the other point I want to make. He said exports have, taken off. Exports took off because the currency went from, 48 to 68 or whatever that number was at the time. So it's nothing that industrial policy or manufacturing policy or export policy has done that would make it sustainable. Yeah. We were at 68, we're now at 62. You would expect to see that export boom sort of come off a little bit. So that's really what's missing, right? A proper manufacturing policy that a China has, for example, that makes their exports sustainable. I don't believe we have that yet.
Tarun, so let's talk about sectors and themes. And you've been vocal about stick to quality, stick to quality, stick to quality. Has the template changed?
No, the template hasn't changed. I think it sort of magnifies itself in a market that's generally uncertain, and uncertain with what's happening globally, uncertain with what's happening in China, obviously uncertainty domestically with political changes, economic policy uncertainty. See, I would continue to stick with the liquid, well-governed name, something that I pound on this table about whenever I'm here.
Bull markets always climb wall of hurry.
Well, world markets, I think, I would be generally sanguine about world markets. You saw the SPX in the US have about a 30% run last year. I think to replicate that would be quite hard. But European banks, Europe continues to slowly grind out of which will be structurally a difficult situation anyway with the euro being what it is. But at least it's grinding out. There's wage deflation in Europe, which is generally helping competitiveness. So I would be sanguine about it. Obviously, it's not quite tail risk, but the one big risk, I think, globally is China. China has also pumped about $1 trillion into the domestic economy since the global financial crisis, which to my mind has also sort of just disappeared, if you will. So I think that's the one economy to watch. But, with $3-4 trillion of reserves, at least they've got firepower to recap the banks, which I think banks in China are definitely troubled, as they are in India. They have the ability to recap banks. I'm not sure we do. But to me, actually in India, the biggest issue that we face is banks are bereft of capital, and they need to be recapitalized. And, as much as our new RBI governor is doing, they need to be recapped.
So, coming down to India, would you still stick with the crowded trades in IT, pharmaceuticals, or would you look at contrarian bets? And, I've been talking a lot about the PSU banks. Nikunj highlighted that as well. I'm just saying that, even a bad asset has a price. And if some of these banks, get together and step up on their recoveries, try to clean up their loan book, the NPAs, the asset quality, start improving on their asset quality, then they could be a good buying opportunity from a value perspective.
See, most of them are trading at sub 1 times book, and there's a reason for it. My own view is there's a lot more in there that hasn't been surfaced. I think it's still too early. And it's one thing to clean up your balance sheet, it's two to have P&L growth. with no new lending happening. I mean, there's 15% credit growth, but I don't know how much of it is just refi and how much of it is new. I think that's a dimension that I don't really know. But you need to rebuild your balance sheet. Now, you rebuild your balance sheet with one of two ways. You get recapped by the government, which is what we've talked about, or you have a steep yield curve. Now, the India yield curve is actually flat to inverted. Very hard to rebuild your balance sheet. So I would say we're at least a couple of years away from saying, okay, PSU banks look interesting. Private sector banks, yes, you need to sort of do your work and you can figure out that long-term, well-managed, there's a growth story around that. PSU banks, I'd be very wary.
So let me construct a scenario. Let's look at the ambassador of the banking sector, HDFC Bank. It is trading at what? 4 times book?
Yeah.
State Bank of India, size, reach, it's a sovereign bank, it will never go under, is trading at sub-book. Now, markets are not about buying popular trades. Markets are also about buying value trades. You know, good news and good price rarely comes together.
Well, I don't think they're quite there yet, just as there's no growth story trade either. But I don't think they might represent good value, but will the value translate into price appreciation? I guess that's the subtle difference. I don't think so for the next couple of years.
Give me a stock which you've been owning from last 10 years and you've got plans to own it for another 10 years.
M&M is a great story. And if you look at, it's in theory, it's auto. It's now, trading, is it still north of 1,000, right?
Almost 900.
Yeah, okay. So M&M, auto sector, high rates, but, continues to do well.
So what would be your contrarian bet, given that, we have 2 big events in the election and then perhaps another budget? Again, the point is that do you stay with the sectors which have played out, which have seen an extended rally, or do you bet on, a sector which is perhaps favoring on value? And if that is the case, then what would that sector be?
Well, private sector banks, something to think about. They've been sort of beaten up. A lot of them are down 50% from their highs. I think the consumer pack's been beaten up as well. And I think they're down, 30%, 35% from the high.
Some of them are more, actually.
More.
ICICI Bank from 12 to 50.
So I think if you take a view that consumers feel a little bit better post the uncertainty around the election lifting, then I think that's a sector to play. But again, it's not a 3-month thing. You hold it for the next 2-3 years, you'll probably be okay.
Tarun, appreciate your time, and so good to have you back on ET now.